Got $100 burning a hole in your pocket? Don't let it just sit there. You can turn it into a powerful investment portfolio, yes, even with just a $100 bill. Now I know what you're thinking, but I don't have $1 million to invest. Well, neither do I, but guess what? We're going to build a diversified portfolio without breaking the bank. Think of it like a pizza. You don't want all cheese, right? You want toppings, stocks, bonds, and maybe a little slice of real estate. With just $100, you can own a piece of the pie, the investment pie. Ready to grow your money one slice at a time? Let's dive into how you can start investing today with just a tiny budget. Imagine this. You're at the grocery store and you're grabbing fruit for your smoothie. Do you grab just one type of fruit? Nah. You need bananas, berries, maybe even some spinach to make it just right? Well, investing works the same way. That, my friend, is called diversification. It's the art of spreading your money across different types of investments, like stocks, bonds, and even real estate, so if one thing doesn't do well, your whole smoothie doesn't get ruined. Let's say you only invest in one stock, like just a single apple. What if that apple rots? You're out of luck. But if you have a whole mix of investments, like 50% in stocks, 25% in bonds, and 25% in real estate, your risk is lower. And even if one investment isn't doing well, the others can help you stay on track. Here's the kicker. Diversifying doesn't just reduce risk, it can also increase your chances for long-term growth. But let's be real. No one wants to put all their eggs, or apples, in one basket. Got a favorite way to diversify? Drop a comment below. I'd love to hear how you spread your investment love around. See? That's how diversification works. Creating a balanced portfolio so your investments stay healthy and grow over time. You don't have to be a millionaire to do it. Just a little strategy and a mix of options can make all the difference. Ever go to the store, find something you really want, and then look at the price tag and think, nope, that's way too much? Well, investing works the same way. You want to get the most bang for your buck, and that means choosing low-cost investment options. Let's talk fees. Some investment options come with crazy high fees that can eat up your returns faster than a snack disappearing at a party. You want to make sure your money is working for you, not the broker. For example, mutual funds and traditional brokers sometimes charge hefty management fees, 3%, 4%, even 5%. While that might not sound like much, over time, those fees can add up and take a huge bite out of your potential earnings. Imagine this, you're investing $100 a month. At 5% fees, you might lose out on hundreds or even thousands of dollars over time. But with low-cost options like ETFs and index funds, you can keep those fees to a minimum, sometimes as low as 0.03%. ETFs, or exchange-traded funds, and index funds are the heroes of the low-cost world. These funds pool your money with other investors to buy a variety of stocks or bonds. Because they're passive, meaning they follow the market instead of trying to beat it, they come with lower fees and give you a slice of the whole market pie. Got a favorite low-cost option that you love? Share it below. You never know. Your suggestion might help someone else start their journey. So, remember, low-cost investments mean more of your money stays in your pocket. And that's how you build a bigger portfolio over time with just a little smart planning. Alright, so you've got $100 ready to invest. Now, let's talk about how to allocate it, because let's face it, just throwing it all in one place is like going to a buffet and only grabbing pizza. You want variety. You're not here for the same thing over and over again, right? You want a mix, something healthy, something sweet, and of course, a little bit of everything. Same goes for investing. Step 1. Split up that $100 across different types of investments. The key is diversification. Now, I know you're thinking, but I only have $100. And that's exactly why this step is so important. We want to get the most value out of your limited funds. First, let's start with stocks. You're probably familiar with them. Companies like Apple, Amazon, or Tesla. Let's say you allocate $50 to stocks, focusing on low-cost ETFs or index funds. These funds give you a piece of multiple stocks in one go. It's like buying a basket of fruit instead of just one apple. With $50 in ETFs, you can easily invest in hundreds of companies without spending a ton of money. And with fractional shares, you can even invest in those big-name companies with just a small amount of money. You don't need to buy a whole Tesla stock to get in on the action. A tiny slice of that stock can still help your portfolio grow. Next, let's talk about bonds. Now I know, they might not sound as exciting as stocks, but they are super important for stability. You want to allocate around $25 to bond ETFs. These funds invest in government or corporate bonds, which are generally less risky than stocks. They help balance out the volatility from the stock market. For the last $25, let's go a little wild. Real estate. Well, not wild, but still. Real estate can be expensive, right? But with real estate investment trusts, or REITs, you can invest in real estate without actually buying a property. You can grab a share of a commercial property, residential building, or even a shopping mall with as little as $25. Now, I'm not saying you're going to be the next Warren Buffett overnight, but with $100 allocated wisely, you're setting yourself up for steady growth. It's like planting a tree. You won't see the results immediately, but with patience, that investment can grow into something much bigger. How do you allocate your money when you're starting out? Drop a comment below. Sharing ideas can help everyone learn new ways to stretch their dollars further. So there you have it, $100 divided into stocks, bonds, and real estate. It's all about spreading your investments so you can sleep easier at night, knowing you've got a little bit of everything in your corner. Does the idea of investing sound overwhelming? A big pile of paperwork, complicated forms, and high fees? Don't worry, there's an easier way. Micro-investing apps. These apps let you invest small amounts of money, starting with as little as $1. Yep, $1. So if you've got spare change lying around, you're ready to start building your investment portfolio without the headache. Here's how they work. You link your bank account or card, and whenever you make a purchase, the app rounds up to the next dollar. That extra change gets invested automatically. It's like your coffee purchase today could help you buy stock in big companies tomorrow. These apps usually offer a choice of ETFs, stocks, or bonds, so your money is automatically diversified. No need to pick individual stocks. It's like having a personal financial advisor, but without the fancy fees. Curious about which micro-investing apps work best? Drop a comment below and share your experience. You might discover a gem you didn't know about. With a micro-investing app, you don't need a ton of money to get started. It's small steps that add up to big results. So, start investing today, even if you just have $1 to spare. Let's talk about something that can turn your small investments into something big over time. Reinvesting your earnings. You know, that small pile of coins you get from dividends or capital gains. What if I told you that those little coins could grow into a mountain? Imagine this. Every time your investments earn money, instead of taking it out and spending it, you let it grow. You plant that money back into your portfolio, just like watering a plant so it can grow even bigger. Reinvesting is one of the easiest ways to take advantage of compound growth. You're not just earning interest or dividends once, you're earning on the earnings too. This means your money is working harder for you, all without you lifting a finger. Most micro-investing apps and platforms allow you to automatically reinvest your earnings, so you don't have to do anything. Once set up, it works like magic, and your portfolio keeps growing without you having to worry about it. How do you handle reinvesting? Do you prefer setting it up automatically, or do you like to make the decision yourself? Drop a comment below. We'd love to hear how you're growing your investments. So, whether it's a few dollars or a few cents, reinvesting your earnings is like giving your portfolio a booster shot. Let your money work for you. Over time, it'll grow faster than you think. All right, you've got $100 and you're ready to invest. But how do you make that small amount go the distance? Simple, diversification. Think of your $100 like a pizza. You don't want it all cheese, right? You want a little variety, some stocks, some bonds, and maybe a slice of real estate. Spread it out. Start by allocating $50 to stocks through low-cost ETFs or index funds, giving you a piece of the whole market. Next, throw $25 into bonds for stability and finish with $25 in real estate through REITs. Want to make it even easier? Use a micro-investing app to round up your purchases and invest small amounts automatically. It's like having a money-growing robot on your side. Remember, with just $100 and a little strategy, you're on your way to a diversified, growing portfolio, one slice at a time. All right, so now you know how to build a diversified portfolio with just $100. It's not magic, it's smart investing. Spread the love across stocks, bonds, and real estate. Feeling inspired? Want to start your own portfolio and watch it grow? Hit that like button to show us some love, because we're all about that financial growth. And don't forget to share this video with your friends, because who doesn't want to turn $100 into something bigger, right? Got a question? Or maybe a super clever $100 investment tip? Drop a comment below and let's talk. The best ideas might just show up in the next video. Want to learn more about smart investing? Check out our other videos on this channel for tips, tricks, and everything in between. And hey, don't forget to click on that recommended video. It's the next step in your investment journey. Thanks for hanging out with us at XTRM Finance. Remember, start small, grow big, and diversify